When you got very big deviations in terms of overbought conditions, as well as very elevated levels of MACD signals, that has typically corresponded with a more important peak, at least in the short term, with gold prices. Okay, here's what you need to know before the bell this morning. The market is looking to actually push to new all-time highs right now. We're very, very close to that, just a hair's breadth away from the market reaching an all-time high this week. So again, that's certainly very bullish. Breadth has improved markedly for the markets itself. So again, a lot of the things that are going on. We saw a big breadth thrust recently where breadth had sharply improved in the overall market. The 10-day rate of change has been extremely strong. And the advanced decline line, we had 10 times more stocks advancing on Friday than declining. That's a very bullish signal, at least in the short term. That generally says that the markets are back in a bullish trend. Concerns or fears about a decline or a recession certainly kind of fading into the back right now. The market currently is pricing in a 0% chance of a recession at the moment. The market looks ahead about 6 months. So again, on a very strong buy signal, markets are approaching all-time highs. A breakout here would certainly be very bullish, absolutely confirming that the correctional process is over if you do break out to an all-time high. But the markets are starting to reach more overbought levels here, at least in the short term. So again, we may get up here towards this peak right here to an all-time high. That's going to be a decent resistance level, and then you get a bit of a pullback. The market needs a break here to provide you a little bit better opportunity in terms of adding exposure to portfolios. The other big thing that jumped out to me this weekend as I was doing kind of my research for the newsletter was gold. Gold has had a very nice run here. Breaking out, it had broken out to an all-time high. The bullish trend here has been, kind of gold has stagnated here for a while through June, July, and then recently broke out here to an all-time high. So that's very bullish. Gold is getting overbought like the markets. But here's the thing that really jumped out to me. If we jump out to and look at gold on a very long basis, and again, kind of look back. Now, this is a monthly chart, so the only thing that matters is where it closes at the end of the month. So when you're looking at monthly charts, it's always end of the month data that matters. But here's the thing that really kind of jumped out to me, and I haven't seen this in a while, is the fact that we're now back to extremely overbought levels. And again, now this is a monthly basis, so this takes a really long time for these kind of overbought conditions to occur. But here's the thing that really kind of jumped. When you got very big deviations in terms of overbought conditions, as well as very elevated levels of MACD signals, that has typically corresponded with a more important peak, at least in the short term, with gold prices. So again, if you're long gold, that's great. But commodity traders in general, which is what drives the price. So nothing else drives the price of gold. Gold is a commodity. The only thing that moves the price of gold is what happens on the NYMEX. So that's all the commodity traders. That's what moves the price of gold. Everything else is coincident. So when you hear people saying, well, it's the money supply, it's the deficit, it's the debt. No, those are coincident. Those are things that occur because of coincident nature with a rise in gold prices. But what drives the price, buyers and sellers, that happens on the NYMEX. NYMEX traders are extremely long their speculative positions in gold. And in fact, we haven't seen such a long position in speculation on gold going back. We have to go back to 2020, which was that peak, and basically 2013, 2014, which was this peak. So again, you're at levels in gold that have historically been associated with market tops in that commodity price, at least on a short-term basis, a year or so. So again, don't forget to take, as is always the case, right? Just don't forget to take profits, rebalance your position. It's been doing very, very well. It's been a really good performer this year. It's up about 22%. It's been great, right? But don't forget to take some profits, rebalance your weightings in your portfolio. As always, just like with stocks, works the same in gold and everything else. So that's, like I said, just something that jumped out this weekend. That's what you need to know before the bell this morning.